Let's proceed to the next session. It's a partner session on the topic Next Gen Enterprise Data Management, the currency for BFSI organizations in India to accelerate digital transformation by Ravi Shankar, SVP and CMO, Denodo. Over to you, Mr. Shankar.
Hello, my name is Ravi Shankar. I'm the Senior Vice President and Chief Marketing Officer for Denodo. I'm calling in from California, and my presentation today is on next generation enterprise data management, the currency for BFSI organizations in India to accelerate digital transformation. I will be talking about the challenges that currently that happen in the financial services organizations, specifically in India, but also around the globe, and also how the organizations need to react, especially given the current situation, to be agile, be nimble, and be able to accelerate the digital transformation that is actually being driven by the consumers. If you look at this particular chart from the International Monetary Fund, this is a chart that was actually created by economists. And on the left side, you can see that at the beginning of the year, in January, they were forecasting a worldwide GDP increase of 3.3%. Very quickly to realign that to a negative 3% growth in April, and further close to a 5% decline in June. As you can see, these are world-renowned economists, and even they couldn't predict the impact the virus and the pandemic is having on the economy. And on the right side, you can see further breakdown by the global economy, the advanced economies, and even emerging economies like India and China are included in that. And even those countries do see a decline in the 2020 and before bouncing back. So, it shows the unpredictability of the situation. If you look at this chart, this is a further elaboration of the previous one, except that this one tells when exactly the countries will come out of the pandemic. Again, this was something that was forecast in the first half of the year. And you can see the curves on the left all dipping down below the baseline in terms of a negative growth before they bounce back up into the positive territory, maybe 2, 3, 4 quarters out. And on the right side, you can even see India in the second part of the table being called out, having a negative growth before bouncing back to a positive growth next year. And all these point to the current situation in the economic climate. Now, the Gartner research that you must be familiar with, they did a study, this was back in March itself, and they found like 84% of the businesses have been impacted. And if you actually take the survey right now, this will be close to 100%. So there were no businesses that have been left untouched by the pandemic, and we are all reacting to it. And if you look at what exactly has happened, it is primarily to deal with the couple of things. One, the decrease in revenue because of the lockdown. As a result, the companies have not been able to generate the required revenue. As a result, the budgets have been cut, and also the staff has been let go. So we are facing a new normal, a new reality that we need to adapt, and yet we cannot let it decline. We need to be able to sustain. So here you see the Forrester research. They're kind of predicting in terms of the tech spending within India. And in 2019, there was a robust growth of 7.3%. And you can see that in 2020, they have like two estimates. One is a more optimistic estimate, and another one a little bit more pessimistic estimate. By the optimistic estimate, they are expecting a technology spend of about a little over 1%, but the pessimistic one will be close to a 5% decline. And then in next year, the optimistic one bounces back quite well, even compared to the 2019 spend, but the pessimistic one just shows a marginal increase. So again, there is a lot of unpredictability right now, which we cannot tell how exactly this will turn out. And if you look at the investment that the different technology sectors have been impacted, you can see that, especially like in the IT spend, in the banking, finance, and insurance, there's about maybe 5% of the companies. This was again back in March when the Gartner did the study. Is the companies that have been reducing their IT spend. So as I mentioned, the IT spend has been declining, the staff has been declining. Yet you look at the people. So this is another chart in terms of the state of digital payments in India. And you can see that it is the second highest in Asia in terms of people using digital currency to pay for it. And down below, you can see the two um, uh, services that the consumers use uh, predominantly to be able to pay for it. So while the businesses are getting affected, the consumers are not sitting still. They are actually moving forward. So if the businesses are not going to equip themselves with the right strategy to be able to innovate, with the decline in the spend, a decline in the budget, and the decline in the resources, you will be pretty much left out in the dark. So as senior executives, we know that we are very much on the line to be able to show not only sustain this current pandemic, but also be able to thrive in it in terms of the investment that we need to do. So for that, we need agility in business. So it is very important to pivot. The pandemic happened very fast, very quick, very severe, and only the companies that had the agility to quickly pivot were the ones that sustained. Today, a lot of businesses have gone under. Many of them have gone out of business because they have been too rigid in their business models. They have not been able to show the ability to pivot very quickly given the current circumstances, and they have not been able to sustain. And we don't want to be in that particular bucket. So quite often, if you take a look at it, nowadays, especially in the financial services, a lot of the business operations are powered by technology. And the technology over the period has become very complex. So it actually shows the different systems that are resident across the different functions in different locations. And yet the business users need a holistic view of that information, of this disparate information that is siloed across all these different systems. And you need to be able to integrate all of them. So the IT spends an inordinate amount of time trying to pull all this information together in order to in order to provide that holistic view to the business users. And this is not very sustainable because it's a spaghetti architecture, is very brittle, and quite often when the systems change or something goes wrong, all these things can tend to break down. And this is what contributes to less of an agility for the businesses to move, especially in current situation where many businesses are adopting cloud as a way to lower their spend, given that they have less budget. But getting there is not that easy because of an architecture like this. So that's where Gartner has been talking about this uh, solution called data fabric. So data fabric, they in fact talked about it as a trend, a 2020 trend back in last year itself. And it is actually a way of bringing together the disparate data to provide a holistic view to the business users. We all understand the value in having the data in a single place. So just like the fabric that we wear that stitches together the different fibers, the data fabric, the technology data fabric brings together different systems and data together and provides that unique view to the business users. One such technology that is actually in the data fabric, which is very core, is the data virtualization technology. So which is what I'm going to be talking about. So the data virtualization is a logical approach. So if you look at it, very many times there are the systems that house the data are all physical in nature. They're resident within your data centers, in the cloud, they could be in your partners and so on. And yet bringing the data together, many companies try a physical approach of putting them into a data lake, which only has about 17% success rate according to Gartner, which means 83% has actually failed. And Gartner is advocating not to collect all the data in a single physical repository, but use a logical data fabric approach to connecting to the data wherever it is and creating a virtual view of the data, a single view of the data that can be provided to the business users. So the data virtualization layer is the mezzanine layer in between the bottom, which is the sources, and the top, which is the business users. So it provides an abstraction of the underlying sources, the business users really don't care where the data is coming from. All they need is uh, a holistic view of the data. And that's what the data virtualization layer basically brings. It's a data integration. It integrates the data across multiple repositories without replicating that into an additional system or a repository. And getting the data to it is easy and in real time. So when a business user runs a chart or a report, it asks the data virtualization layer for the data, and the data virtualization goes down to the sources, brings all the data back, combines it, and provides it back to the business users. So in doing so, the data is as fresh as in the sources. If it is replicated, then there will be a time lag between the sources in which the data is continuously updated and in the replicated system. That's not the case over here. Now, the data virtualization layer becomes the enterprise data layer. So it becomes a kind of a data catalog, a place where you can go look up all the information. Think about it like a library. When you go to a library to find the book, you first go look for a catalog. You look for the index, where exactly it is, which section, which shelf, which row. So you need to go pick that up on all that information is in there. So similarly, the virtualization layer contains a data catalog of all the enterprise data that is catalogs for business users to easily find them. And it is a place where you can centralize the security and the governance. So providing the right access of all the data in the enterprise to the right users is very much can be controlled over here. And you can lock it down so that the business users do not inadvertently reach out to the underlying sources to pull up the data or modify the data in the sources. And they can consume the data in whatever the way they want. A customer data, for example, the way sales looks at it might be very different than the way finance looks at it. So it provides these multiple views of the data in the way they need to be consumed. So not many people might have heard about data virtualization, especially in the Indian market. So it is a very popular technology in the United States and in Europe, and it is gaining a lot of traction in Asia and now in India. And you can see it's one of the more stable technologies in the Gartner hype cycle. It's all the way to the right. So you can see that this is a technology that has been tried for very many times, and it's so stable that Gartner advocates it as a technology that you can trust and use. In fact, there was a survey that was done by Forrester Research in which they asked which of the following are included in your plans for data management over the next 12 years. And data virtualization basically bubbled all the way to the top next to the databases. So they are kind of saying that this is a technology that we need for us to gain this holistic view of the data in a virtual real-time fashion rather than having to replicate the data into another repository. So here is an example of a customer of mine that has actually done it. Seacoast Bank is a regional bank in Florida, and they have actually used the technology. And the reason they did that was they were growing pretty aggressively by acquiring other banks in the region. And whenever the banks acquire, as you know, they want to gain cross-sell their products to the other banks' customers, and also the other banks' products to their own customers. They want to cross-sell. So they need a holistic view of the customers. So in Seacoast Bank case, it was impossible for them to gain that view across multiple different systems. So down at the bottom were the different systems, and FIS very specifically is a financial information systems, which housed a lot of this data. And being in a third party, it was very hard for them to make the changes needed to sustain their business model. So they wanted to bring that information management, financial information management back into their within their premises so that they will have better control of it. They had a choice whether they want to go with a physical fabric approach, like a data lake, or a logical data fabric approach using data virtualization. So that's where they decided to go with a logical approach, and it paid them off very well. So they actually used it to bring together the data from all these different systems, gain a unique view of the information, and provide different data from that to the business users that are using Tableau, SAS for analytics, and so on. So they called it the virtual data marts. So they can give finance data, customer data. So all these into separate data marts that they actually provided. As a result of doing this, they were able to actually save, first of all, from a technology perspective, you can see on the left, to using the logical approach, they were able to get it done within 4 months instead of like 8 months it actually takes to stand up a traditional physical data warehouse. And on the right side, you can see that for the business users to consume the reports, it used to take about 3 hours before for any credit verification or risk assessment. Now they can actually do it in 3 hours. So it's much more faster. So think about the amplification that provides in terms of the number of transactions they can get done if within 3 days, as opposed to one transaction. If it is every 3 hours, the number of it is multiplied by 10 or a factor of 100. So that's what they were able to do it. So there are a lot of customers who actually use the data virtualization and the logical data fabric, and you can see them. And they are not just limited to the financial services. They are in fact spread across multiple different geographies. And geographies and also different verticals, I should say. So it's a very horizontal technology that is actually very well used. And that is something that I would advocate for the customers or the technology, financial services technology companies in India. So to summarize, the current pandemic poses a challenge in terms of reduced staff and reduced budget, but you need to keep innovating, for which you need a flexible architecture, for which you need to think about the logical data fabric and the data virtualization as an approach in order to enable that. So with that, I will conclude. Again, my name is Ravi Shankar. I'm the Senior Vice President and Chief Marketing Officer for Denodo. Thank you very much for listening.
Thank you, Mr. Shankar, for sharing your thoughts. Ladies and gentlemen, please share your thoughts on social media using the hashtag ETBFSI CXO. We'll take a short break. Till then, enjoy the expo area and stay tuned for the next session.